because tomorrow is going to be your first day. If you'd like to work here as a broker.
Hey guys, welcome back to another video. So in this video, I'm going to share with you guys a simple, easy to do strategy that you can use to grow your account little by little. It's called a dividend capture strategy, and it has nothing to do with options, so it's fairly easy to do. Now, it does consist of buying stocks of a company, buying shares. Now, we have to buy them before what's called the ex-dividend date, and sell them either on or after the ex-dividend date. So I'm going to give you a quick example as to how I do it and what I did with a certain company. Now, the company you do it on, it's going to definitely be up to you. This is just me showing you the strategy. So many companies out there, they'll pay a dividend, which is money, each and every month or each and every quarter or even annually. If you have a list of different companies where they're going to have an ex-dividend date coming up, you can use this strategy to capture those dividends and receive dividends every other day. Now, let me give you a quick example here on the Robinhood platform as to how I'm doing it and what I did, right? So I'm using HRZN, ticker symbol, Horizon Technology Finance as an example. You can see here that I'm about to receive a $110 dividend payment on January 16th of 2024, which is in less than a month, pretty much. So, the ex-dividend date for this company was December 18th. If you don't know where to find these ex-dividend dates of a certain company, now, depending on your broker, you can still see them, right? Like, let's say here, I'm on TD Ameritrade Thinkorswim. These little symbols with the dollar sign, that's the ex-dividend date. You can see HRZN right here. If I click on it, it'll tell me the date, right? 1/17/24, which is the next ex-dividend date, the next one, okay? Because this one already passed. So let me show you. So the next one is the 17th. You can see it here too, 1/17/2024. This is the NASDAQ website, by the way. It'll give you a brief history of the dividend payments of a company. But here on TD Ameritrade, that's how you'll see the ex-dividend dates. This company I've been following for quite some time now. This is a chart of the last 5 years. As you can see, it's been pretty much just floating around. This big drop right here was during the market crash during COVID. That happened on a lot of companies. But besides that, it's been pretty much just floating around. It pays a dividend each and every month. And currently, it's paying around 11 cents per share. So I bought 1,000 shares. You can see right here, 1,000 shares. I bought them. I'm going to receive $110. And when did I buy them? Well, I bought them December 15th. And 1,000 shares at $13.02. Now, of course, you can do it with any amount of money. This is just me giving you an example as to what I did. I bought 1,000 shares at $13.02. So this was my investment. I bought them before the ex-dividend date. So remember, the ex-dividend date was when? It was December 18th. So I bought them before. You can buy them on the 17th, the 16th. So as long as you have the shares before that date. So don't buy them on the ex-dividend date because you won't qualify for the dividend. You have to have the shares in your account before that date. So I bought them December 16th, and then I held them through the ex-dividend date. And on the 19th, I ended up buying 100 more shares. Now, the purpose of this was to pretty much just sell them off at a higher price, even though I had already qualified for the dividend on these 1,000 shares. On these 100 shares, I did not qualify for the dividend because it was after the ex-dividend date. And then December 21st, which was yesterday, I ended up selling all my shares at $13.07. Now, obviously, there's not much capital gains, but the whole point of the strategy is to capture that dividend and release that capital. So now I have capital to do it again. I can do it on the same company the following month. Or like I said, if you have a list of different companies that are going to pay out a dividend, you can use this same capital to capture another dividend on a different company and get another dividend payment coming up. Now, I do have a list of different companies. I've been following certain companies for quite some time now. Let's say, for example, the next company that's coming up, it's ticker symbol O, which is Realty Income. This company I've been following for quite some time. It is one of my favorite monthly paying dividend stocks. This is a REIT, Real Estate Investment Trust. It also pays a dividend each and every month. So this one has an ex-dividend date of December 29th. So if I buy shares of the company anytime between now and December 29th and hold them through the ex-dividend date, I will qualify for a dividend of 25 cents per share. So for each share that I have, they're going to pay me 25 cents. And I can use this same capital to do that. So I keep reusing pretty much the same capital over and over. I can do it as many times as I want. Now the whole goal is to get out of the stock, release that capital and just rinse and repeat. Now each stock is going to vary, right? Because sometimes on the ex-dividend date, the price of the stock drops by the ex-dividend amount. And so you might have to hold on a few more days. In this case, I bought December 15th. I sold December 21st. Might be just a little bit on capital gains, which is not much, but I am receiving a dividend payment of $110 on January 16, 2024. And again, like I said, I can repeat this as many times as I want. Now, a lot of people think that, they have to hold on through the record date and stuff like that, or they can't sell on the ex-dividend date. That is completely false. Now, in Europe, in other countries, you might have to hold on through the record date before you sell and qualify for the dividend. And here in America, we can sell even on the ex-dividend date and thereafter, and we would qualify for that dividend. Now, even if you sell with a little bit of a loss just to release that capital, as long as your loss is less than the amount you're about to receive in dividends, it would still make sense. Sometimes the price of the stock might drop just a little bit more and you might have to hold on just a few more days, but it is important that you pick up very good stocks when doing this kind of strategy. Stocks that you follow, stocks that you understand how they move, and so on and so forth. So this is exactly how I'm receiving dividend payments each and every other day using the same capital over and over. And, it's a strategy that's been working pretty well for me on certain stocks, certain companies that I've been following for years. If you guys like these kind of videos, let me know. Leave a like, leave a comment down below. And until then, I'll see you guys on the next
Tomorrow is
video.
going to be your first day. If you'd like to work here as a broker,